So I lost $500 on Friday. I hit my daily loss limit. My platform locked me out, and I couldn't place another trade even if I'd wanted to. Now, normally heading into the weekend, that would have hurt especially hard. I mean, I would have had all weekend to think about it. Yet, honestly, it may have been the best thing that happened to me all that week. If you're new to trading, you might think I'm crazy. Why celebrate a loss? Because in my five-figure tuition days before I started this, a $500 loss didn't stop at $500. It turned into a $2,000 account blowup because I would revenge trade. And the only reason it was a $2,000 account blowup is because I only had $2,000 in the account. I would try to get back to green. I would have over-leveraged my position. I would have revenge traded. You see, really, I never set my daily loss limit in the first place before. And here's why, and this is what's tricky. On a couple of occasions, I had exceeded a mental daily loss limit when I didn't opt for it to lock me out, and I actually would end up green on the day with another trade or so. Those outliers taught me bad information, and my logic then told me DLLs don't apply to me. Isn't it fascinating how we think that rules don't apply to us? Anyway, I'm currently trading a Tradeify Select Funded and Select Challenge Copy Traded account together. I've got a separate TopStack XFA, and if you saw my last video, you know that I've passed dozens of these challenges, these combines, and then I've blown every funded account I ever had before taking a payout, even when I was eligible for them. And that really hurts, but it happened because I didn't have a ceiling on my stupidity. Now I do. On Friday, this platform, this $500 loss actually saved me from myself. I mean, this is where I have it now to where it says $500 daily loss limit, and the personal action is to liquidate and block. So that's what I have now at all times on my both Tradeify and TopStep accounts. So let's look at the plan, and then let's look at the trades that got me in trouble. I'm looking at Friday, April 10th, 2026. I had an original mind to look for a flush of this 48 to 52 zone, and I'll tell you why. If you go back earlier in the week, we had come up sharply from this zone down here. We had broken out sharply from that downtrend leg. Then we started channeling in here. We had hit the 48 to 52 zone and rejected. Hard rejection there. So then we returned to this zone here. And all this is going to come together here as I show you the plan. So then the next day, that was Wednesday early morning, before the market opened, but overnight hours. So now, Thursday, we got news. The market rockets on the news. We blow past that level. But then we came back to test it. Bounced off it, came back to test it, bounced off of that, and then the market closed early, the regular hours. So now in the overnight session, we tapped it once, twice, almost three times. Each time had a nice bounce away from there. So in my mind, my trade plan, I'm looking for the prior day low to break, to get flushed, liquidity sweep, call it what you will. I'm looking for that to get flushed and then bounce again away from it, but I want a lower low off of here, and we got that right at around 12:30, 12:40. So I ended up going long here with a 10-point stop. Now I bought 5 MES contracts, $25 a point. I set my loss limit 10 points below. That would be a $250 loss if it stopped me out. Therefore, I could be wrong in my first trade. I'd have one more swing at the bat if that went awry. Because I'm also thinking it could fail and it may end up coming down to this level. And this level was important earlier in the week also. Resistance, resistance. And I was thinking now it may become support. So that was my rationale going into the trade with a clear mind. I then let emotions take over and I messed everything up. This trade, when it started coming back, I got nervous. I threw out the trade plan, went with my emotions, and I moved my stop to break even. I got out of the first trade, break even, and it was downhill from there. The trades go up this way, and you can see it was just a cycle that went worse and worse. I mean, look at this mess. Now, Mark Douglas wrote a book called Trading in the Zone. And I would highly recommend that as a must read for anyone. Mark Douglas said there's a huge psychological gap between assuming you're a risk taker because you put on trades and fully accepting the risks inherent in each trade. When you fully accept the risks, it will have a profound implication on your bottom line performance. And that's the lesson that I hope I've learned from this fiasco. Because the second I saw a few ticks of profit, I moved my stop to break even. I was scared to lose. I hadn't truly accepted even a possibility of a loss of $250. Now, another rule I violated, and it fits hand in glove with fully accepting the risk of the trade. To quote Adam Mancini here, he repeatedly says, I want to give every trade every chance to work, and I will never stop out arbitrarily without a support being lost, nor will I stop out due to my interpretation of price action once I am in the trade. Had I been patient and let the trade play out, I would have had a nicely profitable day. Not a home run, but a nice base hit. And that's all I really need to be looking for anyway. Because I didn't give the trade room to breathe, I got stopped out for scratch. Then I FOMO'd back in. Then I got nervous and cut it. Then the ultimate sin. I flipped my bias. I thought, the market's weak. It's Friday afternoon after a big up week. There's a possibility of war headlines over the weekends. People will definitely be flat over the weekend. The market will sell off probably to this level down here. That's what I was thinking as I pointed that out earlier. So I allowed my mind to say, let's go short on potential weakness. I turned a winning long thesis made through the process of analyzing price action overnight into a losing short spiral. Because although I put on a trade with a stop loss, I didn't fully accept the risk. I moved my stop, and then the chaos began. So I had to once again learn a lesson, but this time, the lesson saved my account, even though I lost $500 Friday. I mean, look at that equity curve. That's the blender. I took 8 trades in 2 hours. That's not trading. That's gambling. Now, Napoleon Hill once said, every adversity, every failure, every heartbreak carries with it the seed of an equal or greater benefit. So what is the benefit here? Well, the benefit is I still have an account. Because I hit that $500 DLL, I live to fight on Monday. Now, the max drawdown on the account now is $1,500. I can be wrong 3 straight days before losing the account. If I can't find profit before losing another $500 in a day, I don't deserve to be in the market that day, and I need to do another autopsy like this one, and I hope that doesn't happen. Remember that poster? Discipline beats motivation every single time. Motivation gets you in the trade. Discipline is what keeps your hands off the keyboard when you're emotional. Now, I promised to show you the good, the bad, and the ugly. And this was the ugly, and I'm neither happy nor proud about it. But consistency is built on the carcasses of these mistakes. And if you're struggling with overtrading, set a hard DLL. Let the machine be the boss you never had. Let the trading platform be your mentor. It's right there for all of us to use. It's helped me, and I want to be careful not to ever enter another trading session without one. Now remember, we're in a marathon, not a sprint. I hope to have a much happier story next time. And hey, be sure to stick to the plan. And if you've ever blown a trade because of revenge trading, drop the amount in the comments. Let's normalize the loss and let's learn from it together. Until next time, thank you.